How to read the financial statements of a company by cyprusaccountants.com.cy. Hi everyone, today I'm going to show you a very fast and efficient way to read the financial statements of any company you want. I know it's a big pile of documents which contains lots of information and lots of numbers. However, there is a fast track on how to read these financial statements so that you can make meaningful conclusions. This is very important in the event that you are an investor in a company or an owner of a company and you want to be certain that you can read your company's financial statements. So stay tuned and we will guide you through the process. Reading of the financial statement. As you can see, the first page is the most important page of the entire financial statements, and this is because it states the company name and the company year. So page 1, you always need to pay attention to it. It's not numbered. So the first page is never numbered, but it contains your company name. So you need to pay attention that it is spelled correctly, and the year end in this case is the 31st of December 2016. Moving on to the second page. This is the content page where it states the contents of the entire set of the financial statements. On page 1 is the board of directors and other officers, is the composition of the company. On page 2 to 4 is the independent auditor's report. On page 5 is the statement of profit and loss, which will show you whether you made an income or a loss during the year. Page 6 is the financial position, i.e. the balance sheet. On page 7 is the statement of changes in equity, and you really don't need to look at this beginner stage. Page 8 again is the cash flow statement. Maybe it's a bit too much for beginners. Page 9 to 15 are the notes to the financial statements. Again, 80% of them are standardized notes for simple company structures. What you do need to pay attention to is the last pages of this entire set, pages 16 to 19, which is the additional information to the statement of profit and loss and other comprehensive income. Basically, the last pages of the financial statements will show you in detail all the expenses and all the income streams and how you have arrived to the year-end profit or loss. So let's go through this set of financial statements of the company X Limited for the year ended 31st of December 2016. Page number 1 is very important as it states the directors, the company secretary, the auditors, the register office, and the registration number. Therefore, make sure that you know who the board of directors is of your company, as they are the decision makers of the company's activities. Moving on to the second page is the independent auditor's report. This page is very, very important, and from this page you need to pay attention to certain sentences only. You don't need to go through all the jargon which you won't understand anyway, because it's an accountancy and audit jargon. However, you need to go through the specific sentences I will mention so that you know whether this auditor's opinion is a clean opinion or a non-clean opinion, i.e. it contains areas that the auditors were not happy with. So you need to go through this paragraph and find out whether the audit opinion is a true and fair view of the financial position of the company. For Company X Limited, its auditors made the conclusion that the financial statements give a true and fair view. This is the conclusion of the entire auditor's opinion. Once you see that, you're happy that the information and documentation as well as the results of the company are true and fair, and you can place reliance on them. You don't need to go through the remaining jargon, as it's a true and fair view audit opinion. At the bottom of the audit opinion, we see who the auditor in charge, the partner in charge is for issuing this opinion, and the auditor's firm. Moving on to the statement of profit and loss, which is one of the most important pages of the entire set, where we see that the company for the year has made 6,300 euros of revenue. It had some administration expenses of 3,000 euros, leading to an operating profit of only 3,263 euros, finance cost of 21, tax of 331, and at the year end this company cleared 2,911 euros. On the other column we can see the prior year results. So if the date straddles like this, it means that the company was incorporated on the 27th of March 2015 and is for the period, and these results here are for the period 27th of March 2015 until the 31st of December 2015. So what are our conclusions based on these numbers? Our conclusions are the following. During 2016, the company has made 2,911 worth of net profit after 331 euros of tax, and its total turnover was 6,300 euros. Therefore, 50% of its turnover is the company's after-tax profit, which is a very good net profit margin. During 2015, the company didn't have any turnover, therefore it has incurred an equivalent loss, the loss of 2,783 euros. Okay, this is a very simple company for illustration purposes, hence the numbers and the notes are very plain and simple. Say we want to know how this revenue is being derived. We need to go into note 5. It's important to remember that this is not page 5 but note 5. So we need to go through the financial statements. This is note 1, 2, 3.4, 4, 5. We come to revenue. Revenue of 6,300 was generated from the rendering of services. There's no more information here, so we'll take it as it is. The auditors state that this company is providing services and not selling products. Going backwards, we need to make sure we're happy with what this finance cost comprises of. So again, we need to go to note 6, not page 6, but note 6. We scroll down and we can see that these are finance costs, sundry finance expenses of 21, which must be bank charges. Moving up, tax of 331 euros. Again, we go to note 7, 6, 7. It is a corporation tax for the year, taxed at 12.5%. This is all the additional information we can get for this income statement. If we want to know more details about this income statement, then we will go to the very end of the set, as discussed earlier on, of the financial statements, which shows a bit more detail. So we scroll down and we go to page 16. Page 16 doesn't vary much from page 5, where the income statement we've checked earlier on was. However, if we move a page down, we're going to see the breakdown of these selling and distribution expenses of 3,037 euros. So if we want to know what page 5's other expenses comprise of, they comprise of rent of 800 euros, sundry expenses of 237 euros, auditor's remuneration of 1,000 euros, and legal fees of another 1,000. If we go a page down, we're going to see the breakdown of the finance cost, which, as I've mentioned earlier on, comprise of bank charges. And if we go to the very end of the set, which is page 19, we're going to see how the corporation tax was derived for company X. We will explain this working in a different video, but for illustration purposes, we can take that the net profit before an adjustment was 3,242 and the taxable income was 2,409 euros at 12.4% plus the 10% charge for non-provisional tax payments. The auditors arrived into the 331 euros and 24 cents worth of corporation tax for 2016. At this stage, we have analyzed the income statement, which is on page 7 of the financial statements, and we will move on to page 6, which is the balance sheet. This is again very important, as the statement of financial position used to be called balance sheet, shows all the assets and all the liabilities of the company. Starting from the non-current assets, the current assets, trade and other receivables of 2,750, cash at bank 4,879, which come to 7,629 euros worth of assets. What does it mean? It means that at the year end, on the 31st of December 2016, this company, X Limited, had almost 5,000 euros sitting in its bank. It also had 2,750 euros due to the company by its debtors. If we want to see an analysis of this amount, there is a note, no date, and we need to go to no date to see what is going on with the debtors. Here is a note, there isn't much information, it just mentioned trade receivables, so know for a fact that this amount of 2,750 is not other receivables but trade receivables. Moving backwards to page 5, we have covered 50% of the financial position of the company. We see that in the previous year, 2015, there was no money in the bank and the company was not owed anything. But in 2016, the company owed almost 3,000 and it has in its cash at bank and in hand almost 5,000 euros sitting there. If we move on to the second part of the balance sheet, we're going to see that the equity, which is the share capital, is 1,000, which is the standard share capital introduced in all small Cyprus companies, and that the profit for the year to date up to 31st of December 2016 is 128 euros. So this company up to the 31st of December 2016 has managed to make 128 euros only worth of profit. The most important part of the second half of the balance sheet is the current liabilities part, which shows us how much this company owes. So this company owes 6,170 euros to trade and other payables and 331 euros for current tax liabilities. If we are uncertain of what these amounts relate to, then we need to go to note 10 and note 11, not page 10 and 11. Here we can see that the shareholders' current accounts account for 3,337 euros, i.e. these are the amount due to the shareholders by the company, and that the company also owes 2,833 euros to accruals. Usually these are audit fees, accounting fees, the last months of electricity bills, waters, rent, and so on. So the company owes to its shareholder 3,337 euros, and for various overheads 2,833 euros, which account for 6,170 euros. Again, we need to go back. There is no jumping backwards and forward. This is how you read the financial statements. There is no other way. You need to read them from page 4 and 5, which is the income statement, and the balance sheet, which is the summary of the detail, and then you need to go through the notes, as we can see here, note 10, trade and other payables, where you can understand the breakdown of that summary mentioned earlier on. So, page 5, we have seen the balance sheet of Company X Limited for the 31st of December 2016. Our conclusion can be that this company has 7,629 euros of assets and its equity is the equivalent, out of which it owes 6,501 to either its shareholder and the tax, as we've seen before, and owes 6,501 euros to its shareholder and to the taxman. The company director, John Smith, has to sign the balance sheet page here. Why in John Smith? Because if we move backwards on page 1, which is a very important page, we can see that Mr. John Smith is the director of the company and Mrs. Sarah Parker is the company secretary. So Mr. John Smith has to sign the director's report and the balance sheet report. For simplicity reasons, we haven't included the director's report, therefore Mr. John Smith has to sign only the balance sheet report. Moving forward, statement of changes in equity is very complicated and you don't need to pay attention to it at this stage, neither you have to pay attention to the cash flow statement. What you do need to pay attention to is this incorporation and principal activities, which is the first note, where the company details are entered here. Also, always make sure that the company name, the incorporation date, as well as its registered address is stipulated correctly in this note, and the principal activities of the company, where the principal activities of this company is the provision of advertising services. It also states here that during the year the company remained dormant. This means that during the year 2016 the company did not trade, which is contrary to the income statement on page 5. because the company did trade at 6,300 euros. Therefore, this error or this sentence is to be amended, as the company has been trading, hasn't been trading during 2015. The rest of the information is pretty standard, therefore you don't need to spend any time going through it. We have discussed revenue and finance cost earlier on, corporation tax receivables, trade and other payables, corporation tax, shareholders balance, page 16, which I've mentioned at the beginning of this video, that is very important, as the last 3 pages of the financial statements contain all the details or the number crunching of the income statement. Reading the financial statements couldn't have been easier if you follow this approach. I'm going to summarize this approach so that you follow it religiously and avoid wasting time and anxiety trying to understanding your company's financial records and information, as well as making meaningful conclusions. So in order to understand fully what the numbers are telling you, you need to go into page 5 and 6 of the financial statements, which is the income statement and the balance sheet, and you need to follow through the notes to understand the composition of these numbers. You do the same with the balance sheet. Whenever there is a note, it means there is a breakdown of further details of how this amount was derived. If there is no note, it means that it is what it says here, cash at bank, 4,879 euros. You do that and you will have no problem in understanding your financial statements, as well as always remember to check whether the auditor's opinion is a clean one, which is stipulated in the opinion paragraph on the second paragraph here. True and fair view, no except for, no disclaimers, no adverse opinion. A clean, true and fair view of the financial position of the company and its financial performance, cash flows, etc. Lastly, or firstly, depends how you feel more comfortable going through the entire set. Always make sure that the board of directors, company secretary, auditors, register office, and registration number are the correct one and they are in accordance to your understanding. Thanks for watching. I hope you found this video very useful.